Good day, viewers, depending on which part of the world you are listening and watching this very video from. I still remain your Dr. Adesha Adiga from Educado Consulting Limited. Today is another wonderful opportunity for us to talk about our business, and the area in which we're going to limit ourselves to this very hour is to talk about why the business will die, why the business will die, why most businesses are not growing the way they ought to grow. And importantly, one of the identified reasons for which most business die today is lack of adequate and proper management for your business. And it becomes so much important that you, as a business owner, you must understand the details of your business, how your business is being run. You must understand it. And if you fail to understand why this business is existing, then the profit that lies in that business will become, you know, elusive, becomes elusive. You won't be able to realize the potential opportunity that lies in that business. And Israel has shown to us that most business don't get to the 10th years of their life business existence. I mean, business don't actually live up to 10 years of their existence. And one of the reasons, just I have mentioned earlier, is because most businesses die as a result of lack of proper management. And the management is the key to the sources and the future growth of your business. Because once this is not there, it gives room for the collapse of that business. And that is one of the reasons most business don't become transgenerational. Business don't become transgenerational because proper management is not actually put to operation in that business. And today, we are going to be talking about small business accounting relevance to the success of your business enterprise as an entrepreneur. Okay, small business accounting relevance to the success of your business as an entrepreneur. And it becomes so much imperative that you understand as a business owner the basic business financial statement of your company or your enterprise, as it were. And most people are failing in this direction because, according to one of the opinion samples we conducted at Educado Consulting, our report indicated that most SMEs, for instance, run their businesses from their head. Can you imagine? You don't have a documentation for your business. You're just running that business from your head. And how do you run a business from your head? Because whether you like it or not, at a point in the development of your business, you need investors. You need investors. And one of those key things the investors wants to see to drive them and give them an attraction to your business is to understand the financial statement, the financial position of your business. They want to know the healthiness of your business, how your business has been able to grow over years is very, very key. And there are three major important financial statements we must, have a very good knowledge about. Number one, you want to talk about your profit loss and account, your profit loss account, your profit loss account. Number two, you want to talk about your balance sheet. Okay. Number three, you also want to talk about your cash flow. But today, we are going to be delving on the very profit loss account as to how it's relevant to the success of our business as a business owner. And when you are talking about the profit loss account, what does it mean? You are talking about income of less expenses, income of less expenses. So you want to understand what the income is as to the expenses that goes into that business operation. And today, a lot of us are falling into that trap. When we do a business transaction and the money that comes into our hand, let's say, for instance, you do a business transaction of 1 million as a receipt or received cash to your hand. Let me tell you, that 1 million you receive is not your profit. That is not the profit, because there are so many things that needed to be deducted from that sales or revenue that you have had. For instance, I remember a brother who came to me recently and he said he has done a transaction with somebody and they paid him 1 million naira for that business operation. And I mentioned to him, the 1 million naira you made is not even your gross profit. Because when you are talking about the gross profit, you will have to remove the cost of the sales for which you have done from that money you have been paid. And I asked him, have you removed the electricity charge that enables you to arrive at this 1 million? Have you removed the logistics that was into you making this 1 million? Have you removed the salary and the wages of people that are involved in this business? Have you removed some other cash expenses that actually went into you being paid 1 million? So 1 million would never be your profit. 1 million is never your profit. That is more of the revenue that comes into your hand as a sale. And for you to understand very well the profit and loss account for any business transaction in your enterprise, number one, you need to remove the cost of sales from the general sales you have received. So you need to remove it. So when you remove this, that gives you what? That gives you your gross profit. Okay? And apart from that, from whatever is left, you also need to remove your operating expenses, the total operating expenses. So when you remove the total operating expenses, that will give you what? That will give you your operating profit. So apart from that, you also want to know the amount of tax that will go into this made 1 million, for instance, because the tax who are responsible as officials of the government, we also want to take something from the profit, okay? And when you remove the tax, it becomes what? It becomes profit after tax. It becomes the profit after tax. And also, you could also be having investors. And I'm talking about those people who have contributed their resources into your business. You want to know how much you need to pay them from your business. So if you have investors, if you have people who have lended you money and you have an agreement with them on a particular percentage, you will remove that from that business. So now, once you've gotten your profit after tax, and also sometimes if it's a corporation that have gone into the market, quoted on the stock exchange, you also want to declare the dividends of your shareholders in your operation. So as a result, it is when you have actually removed all of this that you now talk about your net profit. That is your earning. That is the reserve that you can plan on. So I want to enjoin you, never plan profit on the whole sum of the money that just enter your hand without removing the cost of sales, the operating expenses, and your tax as a company owner. Until you are able to remove all of this, then you can talk about your profit. Okay? So it becomes so much important as a business owner that we understand this. And why do we need to do all of this? Number one, we need to do all of this because as a business owner, you are interested in the growth and the success of your business. You want to see if that business is growing compared to the previous years. You want to know whether that business is growing compared to the past years. That's for you as a business owner. And another important reason as a business owner why you need to understand this, you want to know your financial position in comparison to your competitors. Okay, you want to know because those are the what I would call the tool that will help you to understand your information about the financial information that needed to help you grow that business. All right. Again, investors, people who lended you money, people who gave you their resources to help you grow your business, they also want to be sure that can your business actually pay return on investment for the invested capital into your business. They also want to know because that gives them the drive, the impetus to commit their resources into your business. That's number two. Number three, as important as it is, you need to understand this profit and loss account in order for you to attract loans for the growth of your business because no banks will ever entertain your business proposal without them understanding the nitty-gritty of your financial position. Okay, because they want to also, ascertain that you can actually pay the interest and the capital of the money being borrowed for your business growth from their bank. Okay, so join me again, your Dr. Adeshe Adega, a financial business enterprise coach from Educado Consulting Limited. Bye for now.